Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, January the 15th, the year 2020. Let's talk trading. Foolishness. Now, I know you've all heard about keeping it simple, and you've all heard about, having a written trading plan. You've heard lots of different things. But what really boggles my mind is that still here in the year 2020, if you go and you look at some of these YouTube videos and you look at some of the trading forums and you look at the stuff you get in your email, it's just so much foolishness. And I have to laugh at myself because, in the beginning, you usually follow what seems to be, say the traditional trading advice, the traditional training or trading education and training. You start with a chart, and the next thing you know, there's squiggly lines on the chart. And then the next thing you know, you've got these complex formulas. And it goes from simple to complex, in the blink of an eye. And yet these guys are still talking simplicity. But it's just funny because it's not just in trading, it's all throughout life. It's this internet is just one huge marketing machine. They're trying to capture your attention, get you interested, showing you some shiny new object or something, only to separate you from what's in your hip national bank. In other words, your wallet, your pocketbook. But it's just amazing how many people fall for it. And I guess the reason they still fall for it is because marketing is so good at what they do. They know the psychology, they know how to push your buttons to get you to reach into your wallet. They know all the tricks. And that's one of the reasons why, I tell people don't read books about trading, read it about psychology. Because when you're trading, you're sitting there probably by yourself in front of your trading platform and you're having to make decisions. Now some people get into chat rooms and they wait for the guru to call out a trade and they just follow along and hopefully they make money. And if they do, well, that's great. But in more cases than not, they usually don't. Um, and so I guess that's why I'm talking about foolishness. Just make sure you're not engaging in foolishness. And the thing is, it's a blow to the ego to admit it. It's just like, oh, how can I be so foolish? Or how can I be so whatever? But that's part of learning. If you don't make mistakes, chances are you're not growing, you're not learning. Yeah, sure, you can benefit by other people's mistakes, but sooner or later you're going to get in a situation where you're going to have to make a decision based on what you know at the time. And then you make that decision, things don't pan out, and then you look back and go, oh, I missed this or I should have seen that. And then so the next time you're in that situation, hopefully you apply that experience so you make a better decision in the moment. And, one of the best decisions you can make is that on each and every trade, you have your risk management in place because it doesn't matter what system you're using. The trade you're about to enter, the outcome is not guaranteed. It could be a winner, it could be a loser, but it's not guaranteed because if the outcome was guaranteed, the market would cease to exist. Because if somebody had a system so good that they could guarantee the outcome each and every time, it would just take a while and then they would own everything. That's just how it works. So just don't be foolish enough to not use your risk management, which is having your stop loss in place with the correct position size so you don't risk or lose more than you're willing to lose per trade. Now, boys and girls, fellow traders, you know these videos are for educational purposes only, and that your results may differ from mine, and that trading is very, very, very risky. So, that being said, if you are seeking trading advice, investment advice, financial advice, seek your advice from an accredited financial professional. You know, somebody that has a diploma or certificate on the wall that's probably framed that show that they are accredited. So that way, when you give them your money or they manage your money and they lose your money, you know that it was an accredited financial professional rather than just some random person you heard on a YouTube video or on the internet or wherever. So, disclaimer is out of the way. We can look at the weekly dollar yen chart here, and we can see that we've got 1, 2, 3, 4, 5 gaps that still haven't filled. It's Wednesday, so you still got about half the week or so left to see if we're going to have a gap fill. Wait a minute. 1, 2, 3, 4, 5. Right. Okay, for the dollar yen, it is 40 pips off the weekly low, 31 pips off the weekly high, 38 pips above the weekly open. And you see here we broke out of that high and we're still above it. Now, I showed you yesterday that there was a gap to be filled on the weekly chart, and that's why I had it scrunched. This gap right here still needs to fill. So we'll see if that happens. And this pivot down here, that this weekly pivot is going to need to be hit too, taken out. So we'll see, does that happen or that happen? Which one happens next? On the daily, you can see we were down. We almost hit the previous day's midpoint. We're out of the upper wick zone of the previous day, heading south. And as you can see here, we crossed over the 110. So anybody yesterday taking that 110 double O short, it actually hit 110 today. So if you shorted at the 110, you'd be up a few pips at the moment, not by much. Okay, we put in the high for the week here. You see we opened above the high, the first day of the week, that trading range. But now we're back in that trading range. So we're looking to go long at 94 and short somewhere, call it 109.50. And you can see where we are in the monthly range. We've got 256 with the average of 302. Inside bar traders, no trades at the moment, and this will not be an inside bar considering we dropped below the previous day's low, so no inside bar. Weekly range, only 1 over 100, the euro, New Zealand dollar, and dollar yen's only 22 pips. It's a quiet day. Excuse me. The monthly, yearly, daily H1 highest opens, you can see them here. So this is the monthly, daily highest open. And where's the monthly? Here's the monthly H1 lowest open, the weekly H1 lowest open, and the monthly D1 lowest open's way down here. We did not hit the pivot, so we've got a missed pivot here, but we took out the yesterday's pivot right there. No rat zone. Range too low. Here's the monthly and weekly pivot. We definitely want to take out that weekly. As you can see here, we've already crossed the monthly. Okay, this is the euro dollar here. You can see we took out that pivot. Back to dollar yen. Missed pivot here. Took out that pivot as I just showed you. So we still have a few missed pivots for the month of January 2020. You know, earlier about the foolishness. Once again, some things are just so simple that people just won't do them because, oh, well, if it was that easy, everybody. No, I didn't say easy. I said simple. But you see, many people, they have a bias. I don't know if there's a name for it, but if it's simple, it can't work. They have this belief that the market is complex, is complicated. And especially now with the internet and laptops and all these different trading platforms, there's just so much information. And they believe you need all that. But, you know, if you go back, 100 years, there was a stock market, right? 1920, they didn't have computers and the internet, but they still managed to engage in commerce. And you know what those guys probably did was they had yesterday's closing price and yesterday's high and yesterday's low, and they knew the day's open and they looked at things. I don't know if they ran frequency, if they even considered frequency distributions back there. In fact, an associate, a college professor, I asked them if they could check with their math department and find out exactly when frequency distributions were invented, because I'm kind of curious since I use them. But, you know, it's real simple. We know the range is going to be more than 10 unless there's something really wrong with the market. So right here, when the day opened, you know, it's either going to go through this line, go through that line, or both. It just can't stay there. So maybe if you took that long, maybe you got your fingers burnt. If you took that short right here, there was some money to be made. But, you know, it's kind of why I got the buy zone where, you know, off the open, you know, plus or minus 5, plus or minus 8, plus or minus 10. You pretty much know price has to at least get to that point. And really it has to exceed those points. Unless there's just some weird anomaly. Now I'm going to skip through a few charts here because a trader asked me for something. I got to pause. Okay, I'm back. A trader asked me, they wanted to know if today was making a new high from yesterday or from the week or from the month. And you know, I had written a multimeter, TRO multimeter, HHLL, that would tell you all that. But for some reason, I didn't have it in the dashboard. So I added that function to the dashboard yesterday. So we'll be going out in the batch. I'll probably send it out to everybody that has the dashboard. That's usually what I do. But you see here we've got HH for higher high. And we've got LL for lower low. And so, as you can see, the dollar yen has made a higher high and a lower low this month. So if we switch over to the monthly chart, there's the previous month's high. It's above previous month's low. So, you know, real quickly, you can see who's making higher highs or higher lows, like right here. We've got the Swiss franc, Japanese yen. You can see higher highs across the board there, weekly and daily. So, you know, that's something simple, definitely not foolishness. So anyway, fellow traders, just try not to do anything foolish, because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.